What's up, everybody? We got our third investor psychology class today. We're super pumped to have everybody here. And this week we started on time, so I'm really pumped. And we're going to be talking about some very, very hot topics as it pertains to investment psychology, one of them being XRP. And so I'm joined here with my good friend, Nick Manel. Nick has worked with many companies on the psychological end of their companies. And Nick is actually our chief purpose officer here at the ARC. He's one of our partners, and super glad to have you here again, bro.
Very excited to be here again with you and to be once again aligned in what it is we're trying to accomplish. And let's lay that out for you guys because it ties into our chief sponsor, which is ARC Crypto. One of the biggest dilemmas that we know that we're all facing is this ever widening wealth gap. And ARC Crypto, the sponsor of this live, who's Gwen is founder and CEO of, its chief goal is essentially to shorten that gap, to decrease the gap between the haves and the have-nots. And through a lot of time, energy, and effort, the best way that the ARC constituents and founders and partners determined to do that is, as you would guess, through education. There's really no other way to do it. There's no easy way. The best way is to educate you all as to what drives the wealth gap, what it is that the wealthy and those that have an advantage know and have access to that those that don't and that are on the other side of the spectrum don't have and don't know. And so that's our chief mission here, is to educate you and provide you with the resources. Now, ARC also has done something very, very unique. It's, as far as I know, the only company in the space that has done so, which is not just provided the education as a tool, but taken it a step further, because what Gwen will probably tell you better than me is that educating a person's one part of the puzzle, but the other part is actually providing them with the tools and the opportunity to create success, and in this case, real wealth. And the best way that ARC is determined to do that is through DeFi, decentralized finance, and in particular through a vault strategy, which I'll let Gwen tell you about briefly.
Yeah, so we've got what are called managed vaults, everyone. And these managed vaults is a done-for-you strategy where we're able to invest your money, but you hold custody of it. Whoops, there we go. And so this was such a big deal. And now we've gone out and we found some of the best traders in the world to make sure that we're just crushing during these times. In fact, today we're up, I think, like 5% from over yesterday. We had a little bit of a drawdown, but now we're flying back up and the rest of the market is just melting down. So we're really excited about what we got going on. And yeah, we're gonna let's bring Nick back on the stage. We're gonna talk about some really hot topics today. And one of them obviously is XRP. But Nick and I we've been talking a little off camera here in regards to like what's the psychology that drives this buying? Is it healthy the way you're thinking about your crypto investments? And if not, how can you really get in alignment with like, okay, let me invest in this, but let me think this through, right? Because I know so many people, myself included, where you hear about this major crypto opportunity, meme coin, the next meme coin that's going to go 1,000x, whatever, and then you invest a little bit too much than you're supposed to, and you get wrecked. I had one particular crypto last year that I thought was going to do really, really well. They were gaining momentum, all this stuff. And I ended up putting about, I want to say $25,000 in this thing. And I was up substantially on this investment. And then all of a sudden, that crypto just came crumbling down. The devs basically were like, sorry guys, we're not building this anymore. And these guys were paper hands when it came to businesses, right? They were just super paper hands. So after that, I really learned my lesson, and I was just like, look, there's a few times where I've won, which has been like a hindrance to me, I think, because even in those times that I won, it didn't make up for the losses that I've taken. And had I have been more consistent with my investing, I'd have way more. And not just that, I would have like these good skills to like have my mindset in and go, okay, wait, that's a little too much for there. Yeah. Okay. If I think it's going to work, let's throw 500 or 1,000, not 25,000. And I've done that one too many times that I'd like to admit. So somebody's asking, what are paper hands? That means like, you just sell, you capitulate, you get out. Amazing X. So these guys had business paper hands. They capitulated on their business because they couldn't take the heat. Like they kept saying these things that they were going to do, and then they didn't do them on time, and people would be all disappointed. And then they were just like, guys, why are you getting so mad and upset? And I'm just like, there's a better way to handle this than like crying about it, like, hey, look, this is what we've done or whatever. But anyways,
I think the opposite expression too is diamond hands, right? So the metaphor is that you grip so tightly, you're able to hold on with such strength and courage that you turn whatever's in your fist to diamonds, right? Because diamonds are created under a great deal of pressure. And then the opposite would be paper hands, that you grip onto something so lightly that your hands rip away like paper.
Yeah.
Which is a funny metaphor.
Guys, gals, while we're waiting for the algorithm to heat up for us, can you do me a favor? Can you smash that like button down below? And by the way, if you haven't subscribed to our channel, we do this once a week, and I'm putting out content basically every weekday, sometimes twice, in regards to investments that I'm getting into. Smash that subscribe button and turn on that notification button so you guys get notified once we get on. But yeah, hit that like button for now. And let's get the algorithm heated up to bring more people to learn this, because we do need people to have a paradigm shift in regards to how they think about investing, and specifically how they think about investing in regards to crypto.
Love it. So, the first one of these that we had, we actually sort of organically took a deep dive, not intending to, in technical analysis and establishing how technical analysis is not even informed by, but actually built on psychology, human psychology, which is the only reason that I'm as familiar with it as I am, because I am, not a finance guy. I'm not a trader, but what I am is a behavioral analyst. So I spend and have spent the majority of my life analyzing people's behavior and my own included, so I could help them and help myself perform better. And that's how I have taken on the career that I have today, which is an executive performance advisor, working with C-suite chief executive officers like Gaven and businesses around the world to help them improve. Yeah, we see that question there. Can you talk about the trade war looming? Yes, this is a hot button topic. And okay, let's dive in. And I'm going to use that because you asked, because I believe that things happen for a reason. We'll use that, and we're going to segue it into XRP. So, started the first live technical analysis. The last one that we had, we talked about the first 3 key psychological and behavioral traps for investors. The first being loss aversion. If you guys remember, that's where human beings fear losses more than they value gains. And so they hold on to losing decisions or losing bets, even against and especially against their own strategies. I was talking to one of our one of our colleagues and members the other day about this, how, even when he sets this strategy out and he tells himself this is how he's going to operate, how often at the last minute he'll change because he just wants to hold on to this position that he believed in, right? And that goes into our second one from last week, which was confirmation bias. We gave a lot of examples, real world examples on how confirmation bias ends up supporting a self-propelled belief system despite what all other signs are showing you. So a great example of recent confirmation bias was, we have the most crypto-friendly administration ever coming into office. So clearly Bitcoin's and crypto is going to go through the roof, and then it didn't. But everybody was buying in, assuming that it would. And then when it didn't, people capitulated, which is what caused, or at least partially caused, this recent drawback. So that's an example of confirmation bias. The other one that we talked about last week is overconfidence bias, is believing that you know more than you do, maybe based off of recent performance or past performance. That's another big issue for traders. So those were the three that we covered last week. This week, we want to get into herd mentality, okay, which is going to relate to the subject of the pending trade wars and also XRP, anchoring bias, and recency bias. So let's talk about herd mentality. Herd mentality is exactly what it sounds like. And every time I hear that phrase, I don't know, what does that bring to mind for you, Gwen? Because I'm always thinking of just like a field of cows. My grandmother had a dairy farm, so I remember just these cows just kind of being led on by their keeper. What does it make you think of when you hear
like grass-fed butter? That's just kidding. Yeah, no, I mean, it's just a bunch of animals. It's not just specific cows, but just animals moving in the same direction, and they're forced to be reckoned with, they're not, you're not going to stop them. That's the way I see a herd mentality.
Yeah, exactly. And so, going back to the metaphor that I used on my grandmother's farm, you would see this group of cattle slowly meandering, chewing on grass or straw. And every once in a while, maybe a stray dog would turn a corner and just start barking at one of the cows, or it would just turn a corner and it would startle or a human being would startle one of the cows. And that one cow, because of its position with the rest of the herd, would startle and start to run in an opposite direction. And the rest of those cows, the 150, 200 cows behind, who didn't see the dog, had no visceral or real world experience of fear of the moment, have absolutely no idea what happened, are just responding to the frantic energy of that one single cow. And before you know it, you've got a stampede of 200 cows moving in the opposite direction that now the cow herder has to get back under control. So the herd mentality works in this way and is as relative, unfortunately, to human beings as it is to what we would commonly think of a herd, whether that's, a herd of antelope or a herd of cow or deer or whatever it is. So what ends up happening is that when you see market movements, modern day market movements are really a prediction based off of what people assume other people are going to react to. So I'll give you a moment to take that in. Did that make sense the way that I stated that, Glenn?
Yep. Yeah, 100%.
So it's the way that we assume, there was a sociologist in the early 20th century, whose name is escaping me right now, but he would say that people they don't act the way that they think they are. They don't act the way that others think they are. They end up acting the way that they think other people think they are. And so that's what's happened in the market now, is that people will start to imagine and try to predict based off past performance how people are going to react and what's going to essentially happen based off of certain decisions that are made. And so even though there's no short-term real world pain, so I'm going to give you a bearish example, and then I'm going to give you a bullish example in XRP, right? And actually, in order to do that, let me pull up.
Hold on, Nick. I want to, before you get in there. So like in regards to like the trade war specifically, and going towards what Nick says, you know, it's funny. So many people that will get in here that every single person says, well, I think that the market can go up and I think the market can go down, who tries to make a prediction, right? And that's a very self-serving answer, right? But it's also the truth. It could go up and it could go down. So what I think is, you know, we've got to wait and see, because no matter who you are, and even, you know, I have some of these people. There's a woman by the name of like Tia something, and she's very famous, and she's now gotten pretty famous for making crypto predictions, including one of them being XRP, coincidentally. But, you know, even a blind squirrel finds a nut every once in a while, right? Or a broken clock is right twice a day. And I'm not saying that Tia is not right or wrong, but if you throw out enough predictions, eventually you'll probably be right about something. And I've done it as well. You know, like in November of 2021, I said, oh, I have chills down my bones. I think we're going to get a massive correction here. Well, it was the start of the bear market, right? And so, but I didn't think I was like an oracle. It's just a feeling that I had, right? So with the trade war, it could go good, it could go bad. But at the at the end of the day, right now, the trade war, it does not look good. It doesn't look good from the aspect of the price action that we're getting in the crypto markets, and crypto markets or even TradFi markets are forward thinking. All right. Or forward trading, I should say, right? Usually they're trying to predict the future and they're reacting to what they think is going to happen. So as it looks like right now, Celine, it doesn't look good, but could that turn around in a few days? Sure. Why not? Or could it keep going down? Sure. Why not? The key thing here, and this is why we have our algos, is I wanted to take the thinking out of it to where I know where I'm predicting my downside. And this is definitely, in my opinion, a time where you need to be practicing risk management, because you don't want to be the freight train hitting the wall, as Celine said here in the chat. So anyways, Nick, back to you.
Yeah. So again, tying it back down to herd mentality, right? And Gavin said a key word there, which is prediction. So what ends up happening, and again, I'm going to give you the bearish example with the trade war, and then I'll give you a bullish example in XRP, is that when we hear something like a trade war is about to take place, all right, we don't actually experience any immediate harm. We don't experience any immediate harm. So what drives the market down? What drives the market down is two major factors. One is a significant amount of calculus that's done by what we call market makers. Those are the major players in the space that end up having way more information than all of you and we do collectively, even though that we have a tremendous, we've got more than we've ever had in history. And they unfortunately have more, and they're able to do a lot more calculus with it. And of course, this is going to be exacerbated, and already is, by artificial intelligence. And as a result, they're going to say, based on that calculus, some version of the following. Okay, adding tariffs and a tariff war is going to, in the short term, increase prices, right? Because that makes logic to everybody. If we're charging more for goods that are coming into this country, that means that the prices are going to increase, which means what? It's going to cost more for the average human being to have to purchase something. So as a result of that prediction, and that prediction makes sense, even though in practice, by the way, it may never come to pass. It may never actually get to the point where prices increase. Isn't that incredible? And yet look at the way the market has reacted. But based off of the potential of future prices increasing, which would make it more difficult for the average person to afford to buy things, then these people, these market makers at the top position, they will start to hedge their risk, which Gavin was also just talking about. And as a result, they start to sell off and they start to put that money, take profits, because they've made a lot of it. The markets were at all-time highs, so they made a lot of profits, and they start to put their resources in safer assets. And as that starts to happen, as there starts to be the beginning of a sell-off, then all of a sudden the news cycle kicks in, which is that, oh, the Dow is down X amount of points, the S&P 500 is down X amount of points. And here's where herd mentality kicks in, and here's where it becomes a self-fulfilling prophecy. So market makers sell off a little bit, news cycle kicks in, then all of a sudden you have retail investors that say, uh-oh, Warren Buffett just did this, right? BlackRock just did this. We're going to sell too. That then pushes the sell-off even further. And now the market makers are seeing that their self-fulfilling prophecy was correct, that the value of everything is going down. So they come back in, they sell off even more. Now, all of a sudden, you see how the self-perpetuating cycle happens, and we have what's called panic selling. People who don't know or not experienced enough start selling out of fear that the market's going to crash, or maybe they've over leveraged themselves. They've put way too much money into crypto, or way too much money, or they've bought. We have people that we know like this that borrowed money and remortgaged their homes to invest in the market. And they did it also a lot of the times on that herd mentality because everybody was exuberant. I'm going to show you guys a chart so you can get a visual of this momentarily.
By the way, here, Nick, I'm showing on the screen here. You see, this is exactly what you're talking about. Yesterday, Bitcoin went up to almost $89,000. Look at this wick. And then just came plunging down. And some people may have been like, oh, phew, okay, that's it. And then boom, another huge candle down here on the 1 hour, So it's like, it's exactly what you're saying. They're just, there is that cycle, and then the market makers exacerbate it, and they push the trend even harder. And that's what's going on.
Yeah. And then everybody feeds off one another. And then you have added to it now the concept of market manipulation, which you guys have all heard. And so what happens is that those market makers understand how the public is going to react. And so they put out what we understand, or we know of as FUD. Do you want to explain FUD for those people that may not know, Gavin?
Yeah, FUD, fear, uncertainty, and doubt, and this is how the guys at the top, where they are actually able to manipulate it. And then going back to what Nick was saying about the herd mentality, Chris says that what crypto is only 1%. Yes, that's true, Chris, but that's still a lot of people. All right. That's still a lot of people. And, 1% is more than probably all the cows in the world. So there is definitely a herd mentality, and it's something like crypto that trades 24/7. There is no rest for the crypto trader. There is no rest. I know, like for us, like Celine's talking about, this is not good for ideal for our bags. Well, like when you have an automated system algo like we have, it is. Our algos thrive on volatility, and that's why I've taken like more of a shift from, just hodling. And there's some things that I hodl, you know, a little bit of BTC, some XRP. I just started hodling XRP, and I'll tell you guys why I've been doing that. But, you know, the reason is because instead of using the herd or having the herd mentality trample me, you know, and my bags, what I want to do is I want to use the momentum of the herd, because the momentum of the herd is tremendous energy that you can use to your advantage. Right. And so that's, you know, that to me is really the thing that I have really solved for myself and so many of the other people in the managed vaults, is that how do we make this so that we can use this to our advantage? And that's what we're doing.
Yeah. That's a great thing to keep in mind, and thank you for articulating that. So back to this herd mentality, you guys, I hope, can understand now how and why markets crash. They don't crash based off of something that's happening in the real world. They crash based off of a prediction that's being made, right? Based off of how people think, people will think. So, and that's really important for us to understand. Somebody just wrote, the herd is motivated by fear. Yes. False evidence appearing real. I love it. Thank you, Amazing X. You got a great name there. False evidence appearing real. Exactly. And that's why we have something called the Fear and Greed Index that is highly levied for predictions, right? We bring it up all the time. We brought it up, I think, on the last live that we had. And it's why, prolific investors like Rockefeller and Warren Buffett have said, you buy when there's blood on the streets and you sell when people are greedy. Blood on the streets meaning ultimate fear. Everybody's fearful and feeling hopeless. That's when you start buying up. And you can see how the Fear and Greed Index represents that there.
Yeah, you can see. So I pulled the Fear and Greed Index up for everybody, because this is really something that I'm using to buy like my long-term bags, right? Or if there's a crypto that I like, if it's in greed or extreme greed, I'm not buying anything. But during extreme fear, that's when I'll load up. And this is something, that I really didn't study. I always knew about it, but I never really studied and used it to my advantage. And I've been really using it to my advantage lately. I think that this is something that, again, if you guys and gals are looking to even dollar cost average in, maybe you want to back off when the psychology of everybody in the markets is at 75, right? In terms of investing. And maybe the only times you invest is, between extreme fear and like halfway through neutral. And then the rest, the cool thing is in DeFi, we have, and this is like the patience really has to pay off, and the discipline has to pay off, is you put that into a stable coin farm. And I just did a video, I don't know if it's out yet, in regards to stablecoin farms. So you can literally just put this into a stablecoin farm right now and earn 17% per year. Or I think there's one that I showed that was up to 26% per year. Wait for that market to retrace, and you've got like this huge bag. Uh-oh. Shit. Hey there. Are we back? Yeah, we're back.
We're back.
Sorry, guys. The internet went down for a few seconds there. Anyways, so this is definitely, if you understand the psychology and you have the discipline, there's room to make a lot of money. And so Nick's going to cover right now. Nick, I'm going to have you share your screen. Nick's going to cover the XRP chart that I think is going to be really interesting, because I personally think that XRP is going to be a big mover here. Now they have still some stuff to do. And realize this, guys and gals, as well, because like Nick and I, we were going through XRP yesterday, actually, with Igor, my business partner, our CIO, Chief Information Officer, and he's a real XRP. I don't want to say maxi, but he's definitely in there. And I have to also be realistic about what's being used in XRP, who's using it. Because to think, and I did a video on this earlier, and I know Chris Mason is he likes XRP. I see him here a lot. And maybe Chris can answer this question, but in terms of XRP, like there's a few banks that are actually using it, but there's no statement out there as to how much volume is being used, right? And so we have to be cognizant of that, because if it never comes to fruition that XRP starts blowing up, you may be holding a bag of, the next EOS or the next whatever. I don't think that's going to happen. And I think that the XRP army has been really persistent. That's really why I invested, because I'm like, man, these guys are going to manifest something huge here, something huge. But Nick's got the chart here, and let's take a look. Like, where do we see this going, and what's the possibility here in XRP?
Yeah, so let's talk about the bullish side of the herd mentality and how it fits into a theory that I love called Elliott wave theory. And again, guys, the reason that I know this is not because I'm a trader or a finance guy. I just love anything that's got to do with human psychology and behavior, and I'll study it very, very deeply. And as I did this when I had discovered a huge accidental windfall into crypto back in 2013. So I started to study these things that we're talking about very, very intensely. And I'll explain how it relates. So we talked about the fear side of herd mentality. And you can imagine that, that dog turning a corner, or a snake that frightens the whole herd of cows, regardless of the fact that only one cow ever saw it, and all of them start stampeding. Well, this is what happens in the opposite direction. So what ends up happening is in Elliott wave theory, you essentially have 3 progressive waves and 2 corrective waves, and that 5-wave cycle completes a single cycle, and all of it is a fractal of itself. So you can break down any of these waves into the same thing I just said. So right here, you'll see very clearly 3 waves in the history of XRP. You can see the major ones clearly. But if I were to zoom in, which we will in a second, you'll see waves within waves. This is the amazing thing about these charts, about nature, about the universe, about seashells. It's just the way existence is. You see fractals within fractals if you look intently enough. So what happens here, and what's this Elliott wave theory based on? So I'm just going to give you a very simple summary, right? The idea is that early on, can you see my pointer, Glenn?
Yep.
So early on in the process, you've got early adopters who they believe in the fundamentals. They're typically the loving nerd. I mean this lovingly, the nerds and the geeks around us that just really get it. They believe it. They believe this can work. And so they start to adopt, and they get in early and they get in cheap, right? And so that adoption takes quite a bit of time, as you can see this flat line here, and it goes along and it goes along. And let's say that some piece of fundamental news comes out, and so more people get in, or maybe it just reaches what we call a tipping point of the population. So enough people have become early adopters that now friends and friends and friends of theirs start to adopt. And so all of a sudden the price starts to increase. And then you have your first experience of exuberance, which is, something has gone from 10 cents to 45 cents. It's a 400% increase. And now the buzz is out there. And so now there's a huge new wave of early adoption. And that is prior to the news cycle typically. And that'll be this first wave. And maybe the news will kick in right around here somewhere. And then the news pushes it even further. And that's why they say, buy the news and sell the hype, right? When it starts to become overhyped, that means that we're reaching territory that becomes dangerous. And actually, as you can see up here, the strength of the buying starts to decrease, even though the value is increasing. So this is your first wave. Now, all of a sudden, what that wick that Gaven was pointing to earlier tells us is there was a massive sell-off. And I'm looking at a monthly chart right now, right? So that means in this month, we reached this all-time high back then, nearing $1. And that's another thing, herd mentality, psychological barrier, psychological ceiling. We know that once we get to $1, that was unheard of.
That wasn't $1. It was like $3.30. You're actually looking at the market cap, of XRP, which is wild. Let's see here.
I had the wrong chart up. Thank you very much. So we're talking now, we reached almost $3. So that was the psychological value ceiling, right? And then all of a sudden, man, so many people had made so much money. It makes sense. Smart people are going to start selling. And then all of a sudden that herd mentality kicks in, the sell-off capitulates. And all of a sudden you see this a lot in crypto. You see what ends up being a very, very large retracement that averages somewhere between 70 and 90%. And again, these are also Fibonacci levels. Fibonacci are levels or numbers that we see throughout nature. So you'll see if I were to draw this out, which I won't take the time to do right now, it'd be about like an 80% retracement. So now all of a sudden, all these people have lost money. That means there's a ton of fear and trepidation to get back into the market. So it takes time again. All of a sudden, again, we've got your second round of adopters. And then you got people that sell off because they got scared, they got burnt, so they want to take profits off the table. And then all of a sudden, it starts to build again. Once we pass this psychological ceiling, which was the point of the first wave here, then people buy in again because we think, oh, now it's going to go again to this level, right? That's what people are looking at. They're assuming it's going to at least reach this level again. And look what's happening. If you see where that wick goes, it's exactly what it did. Is we hit that level and people got happy and excited, but there's the expression once bitten, twice shy. So those people that got burned, they're like, okay, not again, I'm selling. And so they sell out. And
which,
now
by the way, that was when the SEC also filed the lawsuit. That was, a lot of the XRP army, argues, and it probably would have kept going. I mean, I remember even I was thinking about buying XRP back then, and then all of a sudden the news broke that they got sued by the SEC. But, people were probably like, I'm not going to sit through this thing, and obviously, except for the hardcore XRP people, they ended up dumping the coin, and we can see clearly on the chart that it, retraced almost back to its bear market, 2018, 2019 bear market number. So,
yeah. So then again, what we call this in trading is what would be perceived as a double top. You can't see it so super clearly because I'm on a monthly chart, but if I came down to a weekly chart, what you would see is that we got really close to this level and we double topped out. So that's why these two are so close to each other, right? That's why this wick actually goes, the wick of this is the first wave of a new 5-wave progression, which I'll explain in a second, but that's why it hit this level right here. It hit the top of this candle and then fell again. And then there was that massive sell-off, and we had a repeat or a fractal of this experience again, okay? Now, the reason that we're in a really exciting phase right now for XRP is that the third wave in Elliott wave theory is always the most exuberant wave. Now, why is that as it relates to psychology and as it relates to herd mentality? Well, that is because once a wave has broken and found support over the price value of the last high, okay, then we've established psychological confidence and psychological support. That's why you hear the concept of support. That's what it's about. And so once it passes, the rule in Elliott wave is that the third wave is never the shortest wave. So it has to be longer than the first wave. So that means that once it passes the first wave, which this has done very clearly and actually did over here, we know we're in a third wave. And that becomes super excited because that's the most exuberant wave, as I've said to you. And what ends up happening is you will see the potential upside predictions. Oh, this is not working. Okay, I'm not going to try to do that right now. So the upside prediction is going to be, some Fibonacci level, which will be like either 1 times or 2x or 3x or 4x. I don't know the exact Fibonacci levels off the top of my head, but the exuberance, the herd mentality in the positive, the bullish sentiment becomes so strong that we know that this is the wave that every trader who knows their stuff wants to trade on, is this third wave, because it's always the most exuberant. Now, if I'm going to break this one down, I want to find 5 waves inside this wave. And what I do is you find the bottom of this progression. So the very bottom is here. And I would argue, just doing this off the top of my head, that we've got, maybe 1, 2, 3, but it could probably be 1, 2, and then we're in the middle of the third wave. So if we're in the middle of the third wave, this is clearly a third wave progression because of how exuberant all this green is, right? You had a ton of the bullish sentiment as a result of the fundamental news that the SEC shifted their lawsuit, or shifted the fine, I guess, the outcome of the lawsuit. And people got very exuberant and excited about that. And as you can see now, XRP is correcting to the former level of this first wave, right at the top of this is the magic of it, guys. It's so beautiful. Right at the top of this spear here, of this wick, you can see is where XRP is correcting to. So based off of what I just said, let me see how clearly I explain that. Gaven, what does that mean about this?
That we formed a new support.
That's
right there.
That means that we're in a third wave progression, because that's another rule of the third wave, is it never never regresses past the first wave. Okay. And it has to be at least 100% of the first wave, which it is. This one is clearly over 100% of the first wave, and it never passes it never regresses, never corrects past the top of this first wave. Now, we're still in the red, right? So this is where, I urge everyone to have caution. Me personally, just like Gaven, would be buying right in here, because I can tell from years and years of looking at charts, psychologically, it's very unlikely. This is not about definites. It's never about definites. It's about probabilities. And so I would give this a very high probability to hold this support here. It's pretty well established. There's other people that could make arguments that it might break it, but I don't, even if it were to break it, it's not going to come down much further. And the argument that I would make that it could break it is something that we call a descending triangle, which is that when it forms a triangle like this, it typically breaks the base of the triangle and comes down a bit further. So it is possible that it comes down, but either way, it's establishing a base here. It's establishing a support, which means what? Which means that there is a very high probability that it then gets into either a 5th wave or a third wave of a third wave. And a third wave of a third wave, if you guys have followed me so far, is exactly what it would sound like, which is the most exuberant wave of the most exuberant wave, which means it's the most bullish time to be in any commodity asset, crypto market, etc. Is the third wave. Did that make sense?
It did. It totally made sense. And we're starting to see, we're starting to see the crypto market bounce a little bit, but I just don't trust these bounces these days. It's just
I'll show you guys why I'm on this. I'll show you something really something else that's really cool, right? So if we look at SPX, or if we look at, you guys can see that we had a huge gap down. I think even yesterday. Yep, a gap down yesterday. That's not a positive. Obviously, that's not a bullish sign for any market. The Dow Jones as well, gap down. Okay. But if you return to Bitcoin, and this brings me to my next point, which is anchoring bias. So up until now, okay, you guys have seen what the market looked like. Let's look at Bitcoin, right? Up until now, Bitcoin has followed the overall market trend. But when we talk about anchoring bias, which is the next point we wanted to review with you guys, anchoring bias is the idea that we take two irrelevant concepts and we tie them together and make an assumption about them. And so we anchor our belief system off of an irrelevant or not necessarily relevant fact, and we make decisions. So an example of this would be correlating Bitcoin to the, I don't know what just happened here. Correlating Bitcoin to the markets. Because up until just recently, Bitcoin was correlated quite nicely. I have to stop sharing because something's happened with the screen here, to the markets. So the assumption would have been that if the Dow Jones, NASDAQ, the S&P 500 goes down, Bitcoin's going down also. There was market correlation. You guys have heard that concept. But if you guys notice, there you go. All right, here we go. Let me go back to sharing my screen. If you guys notice, the correlation has stopped. And I don't know if anybody's pointed this out to you yet, Gavan.
No, you need to share the screen.
I'm going to show you guys right now.
There we go.
Okay. So if we look at the daily in particular, you remember how we saw the big gap down on the SPX and the Dow Jones? Bitcoin didn't follow. Why is that? And this is why I love market psychology. The reason is because we've gone down in this progression as low in the short term as Bitcoin is willing to. This is where market psychology trumps fundamentals. And this is why we got to be careful with anchoring bias, right? You'll always, by the way, find a fundamental that will justify a technical. I lead with technicals first because for me, that's always the most important thing is how people think and how people behave. And then I justify it with fundamentals. And in this case, you see the correlation between the market and Bitcoin has stopped. This is very good for Bitcoin, by the way, because Bitcoin isn't gapping down. It isn't going negative. It means that we've reached a psychological exhaustion. And I can tell you another way that I see that is what we call the relative strength index. So you can see the strength of Bitcoin is actually going up. It's getting stronger here, even though the price action was going lower here. So the price action came down to its lowest point, but you see here on the strength index, it was actually getting stronger. And this is another great indicator for which way the price is going to go. So this is a place that typically I would correlate as bullish based off of a number of factors, not just this one, but this factor right here is very bullish, where the strength is getting stronger, but the price action is going lower. It means we're about ready to go up. And sure enough, you can see that we did here. And this is where Bitcoin broke away from its market correlation and now is independent of the marketplace, which is very positive because the markets don't look good, but crypto might be ready now for this altcoin season that we've all been waiting for. And certainly XRP would be representative of one of the leaders in the space. Was that clear enough? I want to make sure I didn't go over anybody's head. And Gavan, you let me know. Was that clear?
Yeah, I'm actually curious, because we have a few people here watching. What's y'all sentiment? Drop it in the comments section, because I want to know what your sentiment is. Do you think the market's going to go up or down? That's the one thing that I like to do is, we've had so many people calling this, including, the president's son, right? Eric Trump saying, buy the dip. This is, Ethereum's going to go up. And I actually think that they really do think that it's going to go up, but it just probably hasn't worked out the way they've on their timeline. Who knows? But I want to know, are you guys bullish or are you all guys and gals bearish? Me personally, I'm like neutral. And I guess like the more yeah, Chris thinks that they're going to build a bubble. Martha Johnson thinks that we're going up. A third wave on a third wave, tsunami shit.
Exactly.
That's funny. Yeah, UJ, I don't know. Let's see here. Bullish. So Chris is bullish. All right. Yeah, I mean, I hope but why is it that everybody thinks that we're bullish, that we're going up in April? And by the way, this is like a lot of really well-known people. There's like Arthur Hayes, this woman Tia, who have predicted markets before. They're saying, hey, this is April through, maybe June at the most. So we've got like, I don't know, maybe a month, which would suck if we just had like another just 1 month up. If gone are the days of like at least 3 to 6 months of up, man, that's going to be a tough gig for a lot of people. But it's always good when you have that momentum. So let's see here. Gia says bullish after tax day in the US. When is tax day, by the way? Is that the 15th?
April 15th, I think. Yeah.
April 15th. Okay. Well, this woman Tia is saying something about 15 minutes, and some people are alluding that it's that we should be very close to heading up. Fed is going to have to relax interest rates, increasing M2 money supply. Jordan thinks April 15th. Gia thinks April 15th. Isaac is long-term bull. Larry's bull. So there's a lot more bullish people here than bearish. I don't know. I guess I feel kind of like the outlier here. Maybe I've gotten a little scared with all this stuff. Doesn't mean I'm not buying it. Just bought some XRP the other day live during one of my classes. But and I think we're short. Yeah, we're short Bitcoin right now in Scorpio, but that we were long yesterday, so that could change. That could change overnight. So I guess we'll just have to see, Nick, we'll have to see. I'm always curious.
The last thing that I'll caution you guys with, because we're almost at time, and the sixth point that we wanted to cover today is the concept of recency bias. So, as a quick summary, we talked about herd mentality today. We talked about anchoring bias, which is when you take two slightly relevant or maybe irrelevant points and you attach them together and you anchor your opinion and you create a bias around that. The sixth point that we've covered over these last 2 days is recency bias. And that is everything that I've heard you guys talk about, and a lot of what we've talked about on this live together, is that we have the tendency to put too much emphasis in short-term news, recent events, without considering long-term trends. That we are short-sighted by nature. That's just our nature. And so ironically, when you have something like, we have the most crypto-friendly administration coming in, everybody gets in a super bullish sentiment. And then when the market doesn't move the way people expected, there's a sell-off that happens for fear because it didn't meet our expectation, because we created a recency bias. We thought, all right, this news clearly, right? This is why fundamentals are so tricky and why I like to look at trends, which are more neutral, right? The numbers don't lie. That's the expression that we always use. The numbers don't lie. And so I look at these trends and I try to question my own biases, and I help others to question theirs. So recency bias is the idea that we put too much emphasis on current things in front of us. For example, nobody on this live, but unfortunately a lot of people this will happen to, with XRP as an example. They come in with the hype, right? And because everybody's talking about XRP going to the moon, they take that herd mentality plus the recency bias, this recent hype, this recent information, and they go all in on this, right? Because they heard it from their friend working at the grocery store. They heard it, from a podcast they were listening to. They heard it, they overheard it at a coffee shop. So man, recency, getting recent information and signs, and they go all in. And typically in those situations, they'll buy into what we call the hype. And that's why it's buy the news, sell the hype, because at that point they're already too late. So recency bias is the last one that I wanted to cover with you guys today. We're going to have a lot more for you guys next week. Any questions, any other thoughts or questions before we wrap this up? Because I know I got to get going.
Yeah, I just wanted to show, this chart, Nick, real quick before we get off. And then, realistically, the long-term trend is up, guys and gals. And it's not showing any sign of relief. I got so many drawings on here, but here, let's take these out. But yeah, you can see, since 2018, this chart only goes back because it's Binance only till 2018. But, even in these down times, we still climbed our way back. Even in this downtime, we climbed our way back. Nick and I drew some lines on here last time, but we're definitely still long-term bullish on crypto. But again, going back to just, what I'm not interested in, these sorts of drawdowns anymore. And these drawdowns, they just don't feel good. You can see, from like this wick all the way down to here, there's nothing you can give me that I want to hold through a 76% drawdown. I just don't want to do it anymore. And that's why we're actually looking for an XRP script, Nick, is because I actually want to use the momentum of XRP, because I think XRP is going to do well. And I want to protect my downside on it. And if it's a great crypto to own, that's awesome. But I know that I can make more trading it than I can holding it.
Yeah.
So
do me a favor, zoom out real quick, because I want to just tip our audience off to one other thing. And this is how history repeats itself. So if you look all the way back to that first wave there, if you were to go in and measure that, you're going to see about a 70, 80% regression. Okay. That first wave after 2018. Yep. You see, it almost looks like it's 100%, right? That's an 80% regression. That's Bitcoin's history, guys. And look at the wave that comes after it. It's this little mini wave, which ends up becoming the first wave of the next progression. So what was that?
Yeah, that was like 83%.
83%, right? So zoom back out again, right? Now do the same. Now measure, you see that wave in the middle with the two humps?
Mm-hmm.
Okay. Measure from the very bottom of that, from the very top of that, what the percentage regression was going to be.
76%, 75%.
Right? But didn't I tell you guys? It's between 70 and 90%. History repeats. So this is a fair warning for you all that these are fractals. This just happens. This is part of psychology. It's part of nature. History doesn't necessarily repeat. They say it rhymes. So you'll see that Bitcoin and cryptocurrency has this tendency to make these very exuberant progressions with a 70 to 90% regression. So you should all be, it doesn't mean it's going to happen again. It may not happen in this cycle. It might happen in the next one. As I told Gavan, what I have been thinking is going to happen is that we're going to see a fractal of the last progression, where you see there was those two humps. We had a regression, and then we had a new attempt at an all-time high, and then we had the bear market. That's what I've been feeling is going to happen. But Elliott Wave right now, Elliott Wave would say we're still potentially in the third wave. So there could be a fifth wave of the third wave. We just don't know how high that's going to be before the whole thing corrects. And at that point, it could correct to that 70% chance, 70% regression again, or it could bounce off the top of this mountaintop, which is the most likely place it's going to bounce.
Yeah, I mean, if you take a look, let's take a look at like the last time it went here. Yeah, so Bitcoin went up by 1,300% from peak to trough. This time we're at 543. Who knows? I mean, usually the pumps get less intense as more money comes in, is what I've noticed. But
Yep.
then again, if it starts getting adopted by governments and it goes up to gold's market cap, I mean, it could roll up much higher. But again, guys, gals, I like to have my risk management in place. Again, I don't want to sit through any drawdowns any further. I don't care what crypto it is, but we want to use the momentum of the market to our advantage. So anyways, that's all we got for this week, everybody. Hopefully you join us. If you're not a subscriber, do me a favor, hit that subscribe button. We're going to be bringing you lots of DeFi info. I've been pumping out close to 2 videos per day, lots of shorts, lots of alpha and information on how you can make money in DeFi. And then Nick and I are getting on once per week. And we've been talking about the psychology of investing, not trading, but just investing as a whole, so that you can make better decisions. And next week, I think it's on Wednesday, I have a live where I'm going to be going through G-Trade. They just upgraded their platform, and I'm going to be showing you some trades and how I'm trading some of these things, including XRP. So show up there. Let's go ahead and get more followers up in here so you can become part of the community that's growing faster than any other community in crypto. All right, guys.
Thanks, guys. Thank you so much. Bye.